I'm Matt Krieger from Krieger Analytics. Krieger Analytics helps small businesses with outsourced controllership and CFO services. I've been doing this since 2018, and I've been working with small businesses in some sort of capacity with their accounting and finances since 2005. What's happened over the last 20 years in the accounting industry, specifically relating to small business, has been truly fascinating, and it's not necessarily for the good. What we've seen is the amount of professionals available to small businesses continually shrink, and this is happening for a couple of reasons. The biggest one being colleges and universities today are not producing enough professionals to replace the amount of people retiring. Yeah, that's a problem across a lot of different industries. But here's what's happening specifically in accounting. Fortune 1000 companies, public accounting businesses, are taking all the resources, and they're able to do this because they're able to offer much more competitive salaries than small businesses. The result of this is between the lack of bookkeepers and tax professionals and skyrocketing costs, small and medium businesses have to find a better way to accomplish their accounting and finance function. Let's talk about how I'm defining small businesses. For the purpose of this discussion, a small business is one that has 0 to 1 internal resources for accounting. Some smaller businesses might be shocked to learn that larger businesses, $5 million to $20 million, they typically only operate with 1 to 2 accounting resources. Why is this important? The numbers are what they are. Well, let's talk about why small business accounting is so important. First, let's talk about preventing business failure. Poor cash flow management is the leading cause of business failure. 82% of businesses fail due to cash flow issues. A strong accounting and finance function can help small and medium businesses manage cash flow effectively, reducing the risks of financial crisis and business failure. Next, higher profit margins. Businesses with a robust finance function achieve profit margins that are on average 20% higher than their peers. By leveraging accurate financial data, small businesses can make informed decisions that optimize costs, improve efficiency. Next is improve access to financing. I've never seen a small business that says, hey, we have enough financing. Businesses with strong accounting and finance functions are much more likely to secure financing at competitive rates. With improved access to capital by up to 7% and reduced interest rates by up to 5%. I'm going to give you one more bonus item: scalability. Most business owners at one point want to exit their business. Having systems and strong financial controls in place can increase the value of businesses by up to 25%. In some cases, businesses can't sell without a strong financial and accounting function in place. And this makes sense. Think, if you were going to buy a business, would you buy one where you don't trust the financial statements? I divide the accounting function into 3 distinct areas. Think of these as building on each other. Without a strong foundation, you can't accomplish the next higher level task. Accounting starts with the basics, properly recording transactional data. This is vendor invoices, payments, customer invoices, receipts, payroll. Typically, this is being done by a bookkeeper or the owner themselves. Many times, it's just not being done. I've heard too many clients tell me they have no idea where their business is. Think of how crazy that is. You can then have reporting. How good your transactions have been accounted for will impact the usefulness of your reporting. But with reporting, we're talking about the basics, producing a balance sheet, income statement, after the books have been reconciled. In some instances, a good bookkeeper can do this. Sometimes the owner will do this, but I can tell you that in most small businesses, there's no consistency to this. Lastly, let's talk about strategy. Without good reports, it's really hard to determine a strategy. A strong financial function will forecast the future, be able to analyze trends, make strategic adjustments, and develop systems and processes for a business to operate efficiently. Quite frankly, maybe 10% of small businesses are doing this today. You'll see I have taxes outside because I do believe that's going to stay as an outsourced function. Here's the thing about all this. It's getting worse. There are not enough trained bookkeepers to keep up with demand today. Pretty soon, business owners will be left to their own. And if they don't start making plans today, they're going to be left behind. So what does the correct function look like for small businesses? Well, it's not rocket science. You got to get the right people in the right seats. Now, I know what you're thinking. Easier said than done. So here you can see my table. I've listed the 3 functions, and I've listed some ideas underneath. I want to talk through this just a little bit. First, beware of generative AI tools in accounting. There's several issues with them, one of them being data quality. Generative AI tools rely heavily on the quality of the data that's input. If the data that's input is incomplete, inaccurate, biased, then the AI is going to produce unreliable and misleading results. Second is error propagation. AI-generated reports and analysis might include subtle errors that can propagate throughout the financial statements, leading to incorrect conclusions and compliance issues. And lastly is lack of contextual understanding. Accounting often involves nuanced decision making based on a deep understanding of the business context, industry regulations, specific financial goals, etc. Generative AI does not fully understand or grasp these nuances, potentially leading to incorrect interpretations or recommendations. Why am I talking about generative AI? Right now in the finance profession, along with everywhere else, there's a lot of tools that are out there boasting that they can do things that, quite frankly, they're not able to do. Now, AI has a place in accounting, don't get me wrong, and we're going to talk about where that place is. But right now, generative AI to make decisions is not the place. So let's talk about strategy first. Now, the biggest thing I can tell you is a specialized outsourced CFO is the gold standard for a small business. Why is that? Because they can help everywhere else along the process. They can put systems, procedures in place for reporting and transactional work. They can be the resource that your bookkeepers or maybe your internal staff that aren't classically trained bookkeepers can go to support. Next is there's all-in-one services. Think of Pilot, think of Bench. If you don't know these services, go look them up. They offer all-in-one solutions that span the spectrum of all three of these services. Now, you're going to pay for that, and you might not get individualized attention, but you will get a one-size-fits-all solution for your businesses. AI-powered analytics tools. Now, the important thing about AI-powered analytics tools is AI is great in accounting for repetitive processes. If you want AI to do a repetitive task over and over and over, and specifically, we're going to get into this at the transactional level, AI is really, really good for that in accounting. And lastly, there's better training out there for owners today. Things like Udemy, which I've personally used, offers great services if you want to know how to build a financial model. Let's talk about reporting. Small business outsourced CFOs you work with should be very versed in doing things like monthly close for small businesses. If they're not, you might not be working with a CFO that knows how to work with small businesses. If your business requires more, you might be pairing an outsourced CFO with an outsourced controller. There's some AI at this level too. For instance, go out and look at a tool called Digits. Digits is able to look at your financials over a period of time, and they're going to do some trend analysis. Now, that's not necessarily going to give you the results or give you recommendations, but it's going to give you a hint of maybe where you should be looking in your financial statements. Now let's talk about transactional. Transactional is where traditional bookkeepers come in. If you have a great bookkeeper, I'm not going to sit here and discourage you from using them. I think a great bookkeeper is worth their weight in gold. But often that can't be found. Often they're pricing themselves out in markets. What are you supposed to do in that case? Well, the first place I point my clients to is offshore bookkeepers. I'm not just recommending this based off theory. I've used offshore bookkeepers before. They are very, very well trained, and the process can be scary for new owners, and for people that haven't done it before, is often much smoother than they can imagine. There's certain keys to this process working well. One key I'll give you is standard operating procedures. If you have standard operating procedures in place that you can give them, that really helps onboard them quickly. Now, if that sounds intimidating to you, you don't have the time to do it, you don't have the knowledge to do it, that's where that outsourced CFO can help you. Next is better trained non-accounting staff. A lot of these tasks we're talking about at the bookkeeping level, it's not rocket science. An outsourced CFO, an outsourced controller, they can train your staff on how to invoice, how to pull reports, how to code items in QuickBooks. Those tasks do not require a trained bookkeeper. As long as you have somebody that's available as a resource and can help train them on that, you can use non-accounting staff to do the bulk of the transactional work. And lastly is AI bookkeepers. Listen, this is one thing where I think AI is going to have the biggest impact, maybe outside of tax services. Repetitive tasks are where AI is built to help save us time. QuickBooks is already introducing some of this, and they've really been introduced machine learning a long time ago. If you have repetitive transactions, QuickBooks has learned to recognize these and code these consistently. This is the world of how outsourcing is changing accounting. Small businesses can gain so much through outsourcing their accounting and getting the proper skill set in place to help grow the business. Hopefully this has been a help. If you have any questions, please reach out to me. Thank you.